Check the mic and make sure it sound right, boy.
Investing in the stock market, where to start? All right, y'all, let me go ahead and tell y'all why I decided to put this as a topic for today, especially when it comes to preparing for 2025. When it comes to investing in the stock market, y'all, I know that in the beginning you're lost and there's a lot of time that you're going to spend because you don't understand the stock market. You don't know where, or you're doing research and it's just so much that you have to do to be considered a intelligent investor or anything like that, that you will have you will not apply yourself. Basically, you won't apply it. You'll have consumption paralysis or something like that, y'all. Something like that. The only reason I know this is because it happened to me. It happened to me, guys, in 2022. In 2022, I said I was going to invest into the stock market. So I started doing a little something, but I stopped. I stopped, y'all. So when I stopped, of course, nothing was growing. But the only reason I stopped is because I didn't know. I wasn't applying myself. I wasn't active in the stock market. So I wasn't learning. I didn't learn anything. And 2 years later, I was looking at the stock market and I was like, dang, the stock market is actually up. And if I would have done what people suggest, which is just start, get you just a basic ETF and things like that, I would have been way further in my financial journey right now than I am. So now at the beginning of 2024, I'm doing the things and I've seen growth in my finances, and I'm actively participating in the stock market. So yeah, that's pretty much why I decided to do this video, is because I want to encourage you all to just start, even though you won't know everything. There's no way you'll know everything when you're just beginning in the stock market, but you need to literally just start. And there are places that you can just start, but let's go ahead and get this video in here. Investing for wealth starts with a brokerage account. Let's go ahead and get right on into that.
A lot of young people aren't very confident in their money knowledge and avoid risk, according to a Wallet Hub survey. 57% of Gen Z think savings accounts are the best way to invest their money. Here with some tips to get Gen.
Oh God, I'm not gonna lie to y'all. A savings account, I think, is probably the worst spot to invest your money. Savings account has to be the worst. You're not getting anything for that. You're not getting anything for that at all. And when they say investing for wealth starts with a brokerage account, y'all, I will have money just sitting in my brokerage account and it gets a bigger interest than the money that I had sitting in my little savings account. So that statement
Is he interested in investing? We've got Ashley Fox. She is the CEO of Amplify. Great to have you back in studio with us. And so how can we make sure that the future generations are confident about their investing strategy, and where can they potentially start to put toe in the water or put some skin in the game?
So when I think about investing and building wealth, you cannot save or work your way to wealth. So we have to start investing. When we think about our buying power and spending our money, these companies are getting bigger and bigger and bigger. What if we start to own a piece of these companies? And as the Gen Z population continues to go into the workforce, spending their money is only going to make the economy grow. But how can we build our wealth with it? So opening brokerage accounts. Yes, saving is great, but what about when they get older? What about when they're thinking about retirement? What if we start retiring early and we have our money working for us? So it is extremely important that we are not just relying on savings accounts. We are also investing in the stock market.
And so what are you?
Yep, y'all. She put it 10 times better than I did. Like I said, y'all, I am actually, I would say, relatively new to investing in the stock market. I've only been doing it for a year, and my aim in being in the stock market is actually passive growth over time. So I'm even looking at the long term. I'm looking at the long term. I'm not looking in the options, shorts, all those all those extracurricular things that you can do in the stock market. Right now, I'm only focused on the long term goal of this thing. And like she said, we need our money to be working for us. Y'all, one of my favorite books is The Richest Man in Babylon. In The Richest Man in Babylon, he literally explains how your money should be working for you to get more money. The words they use is kind of crazy. Your dollars are like your slaves, and every dollar should be out working, trying to produce you more slaves. Investing 101. Compound interest 101. Once those slaves go get more slaves, all right, we're going back to dollars, y'all. We're going back to dollars because I don't want to be talking about no slaves. Once those original dollars get more dollars, and then those dollars after that start collecting more dollars, compound interest just like that. 10% should be going to yourself off the rip. And then you use that 10% to get more money. And in a savings account, 57% of young people prefer saving. Saving is losing value. If you have a sack of money and you just hiding it under your bed, come back in 10 years. If you have $100 and you hide that $100 under your bed, go back to it in 10 years, that $100 will be what? Spending value, $50 maybe? I'm not gonna say that it's that drastic, but y'all understand what I'm saying. The value of that $100 went down. However, if it was in the stock market, if you invested in the right assets, that $100, hey, it might be worth $500. Who knows? Who knows?
Seeing in terms of Gen Z and how they're doing their own investment strategy planning, where are they performing well, and where are some of the pitfalls that you're noticing as well?
I'm noticing a lot of Gen Zers are really good at attempting to make money.
Okay.
Right? They're finding different ways to make money, whether it's online in different ways.
That's not a bad thing.
No, I love it. I love it. But what else?
Yes.
Right? We're putting in the effort, we're putting in the time, we're putting in the energy. How are we putting our money to work? And if we think about the school system, we're not taught how to invest. We're not taught how to manage our money. We're not taught how to understand credit cards. So we're good at taking out debt. We're good at shopping. We're good at creating content. But what about investing and building that wealth so that we can create passive income? What about dividend investing, right? What about growth stock investing so that money, while we're working for it, it can also work for us while we are sleeping?
What are the top strateries that any...
There you go right there. We are definitely some hustlers. We are for sure hustling. We trying to get after it. But we're not. With a lot of those things, it's not creating money in our sleep. It's not, and we're putting a bulk of our money into assets that are depleting. If we're being real, cars. You're spending on a lot of things that we don't need. Clothes. I wouldn't say vacationing is a fleeting thing, but hey, experiences are worth a lot. I will say that. Yes, experience is worth a lot, but sacrificing your future, it's a little bit scary on that avenue. But yeah, we are good, definitely at spending and gaining debt. Obviously, it says we just don't know where to put our money in assets that will help us gain money because, like they said, we did not learn this growing up at all.
Anyone can be putting into effect with the last few weeks of the year to set themselves up even before that New Year's resolution when it comes to their investing and saving strategies?
The first thing I would say, you have to get a brokerage account.
Okay.
Because having a savings account, having a checking account, we're good at that. We have to start setting money aside automatically. So the first thing I would say, open the brokerage account and pick a small amount of money every 2 weeks that you can set aside. Nothing too big that forces you to feel like you're about to overdraw your account, but something that can be set aside consistently and automatically so that you're comfortable and confident. I always tell people at Amplify, the people that we're working with, you can start with $20, right? There are brokerage accounts now that allow you to buy fractional shares. What if we $20 our way to $1 million? What if we don't have to work until we're 50, 60, 70 years old, but we're building now while we're young? We're starting small and it's compounding over time. So I would say get the brokerage account open, set small amounts aside automatically so it happens without you even thinking about it, but also build a strategy. Think about at the end of 2025, what do you want life to look like? What kind of money do you want to have coming in? How big do you want your portfolio? How much passive income do you want to have coming in? And start moving with intention. And every single quarter in 2025, increase that automatic deposit just a little bit so that you can train your mind to grow as you grow as a person.
I want to marry two different.
Okay, y'all, I want to go back to that right there. This right here is 101 investing for beginners. 101 investing for beginners, especially when it comes to the stock market. Guys, start early. Can be as little as $20. Become educated to help build confidence. All right, I'm gonna go ahead and give y'all a little bit in there because I know there's some questions that can be asked. Okay, I know they said get that brokerage account. Where do I get this brokerage account? Y'all, a brokerage account basically is just an account that you use to invest into the stock market. That's what makes it different from a check-ins account or a savings account that is with a traditional bank. A brokerage account allows you to invest into the stock market. Okay, that's just period, point blank. Go look for the basic ones, y'all. Fidelity, Charles Schwab. What's it? It's one more. It's one more that I'm forgetting. But I use Fidelity. You will also hear things like Weebly. What's the other one? Robinhood. Those are also brokerage accounts that you could get as well. But I just go for the normal brick and mortar, Charles Schwab, Fidelity. Like I said, I have Fidelity. And then when it comes to start early, like I said earlier, y'all, I was actually doing this 2 years ago. I was doing this 2 years ago in 2023. But after I input my first one, I said, I don't know this. So I stopped doing that. I stopped doing it. But I picked it back up and now I only put $25 a week into that thing. I've only been putting $25. That's it. And because I've actually been active in there, I'm becoming more educated with the stocks that are offered, with the different ETFs that they have to offer, where I might want to go in the future with this whole thing. Of course, like I told y'all, I'm full-term, long-term with this thing, but now it has even gave me the confidence to start looking into Bitcoin as another asset that I can invest in, because it's kind of, Bitcoin feels like, to me, it feels like the stock market because it's still growth and all those things. But that's the basics, y'all. That's literally all you need to know to get started with that thing. And then I would even add automated because like I said, when I didn't have it automated at first, fear definitely it hit. What if I lose money, or what if it's not gaining how I want it to? And I was really in a fearful mindset instead of a abundance mindset. So once that switched over, and at the beginning of this year in 2024, I started investing in that thing, $25 a week, y'all. That's it. That's it. And I've seen growth in this part of my life. But for beginners, I feel like that's all you need. I had a lot of consumption paralysis because I was just consuming so much about, okay, where do I start? How do I do this? Like, what do I put my money into? Now that's something that I definitely can say. Once you get that brokerage account, y'all, you have to go into the brokerage account and actually allocate the money into stocks. And this is where a real big consumption analysis can come in, because, or paralysis, you need to just do it ETF, y'all. Do the big ETFs. VOO, SPY. You won't be able to buy the whole thing most times if you're a beginner, because you're starting with small amounts. But now they do fractional shares and all those things with a lot of the brokerage accounts now. That's what I've been doing. So you just put in a little money here and there until you build up the confidence or the knowledge to actually start investing in single stocks. Look into the magnificent seven, y'all. Look into those things. But the most important thing is that you become a player of this game. Once you become a player of this game, you then almost force yourself to start learning how to play it, y'all. You're gonna start learning how to play it. That's just how it is. That's just how it is. It's like back in the day when you played games, y'all. You didn't have YouTube. You had to learn how to play it. And these days now we have YouTube, so you can even treat this like YouTube, but it is financial. And they say do not take your financial advice off of YouTube, because people on YouTube are not financial advisors. So you got to do your own knowledge check. You got to do all that stuff. However, like I was saying, the best thing is to actually get started, especially if you're in Gen Z. Let's go ahead and continue
about it, but also build a strategy.
Could be a trend that takes place in 2025 within the mindset of the workforce, and where there could be a trend that takes place in 2025 of revenge quitting because there isn't the upward career trajectory. But I'm going to take the other side of that. Say you finally come into that promotion. Say you finally are able to say, all right, I'm getting a new raise. What is your mindset that you need to take on the second some of those things start to fall in line?
So if I'm being honest, I know just whether you are a Gen Z or baby boomer, anyone, when you make more money, you create a way to spend it, which is fine. Acknowledge the fact that you want to spend money on other things. A book,
yeah.
So acknowledge that.
Yeah.
But also understand, to sustain that lifestyle, to always be able to put yourself in a position to get the things that you want, you also have to set money aside so that at some point when you don't have that promotion, at some point where you choose to leave that job, you have accumulated wealth that has been set aside, that has been grown, because it's great to work. It's great to build a business, right? But what about when you don't want to anymore? What about when you want to travel, when you want to do things? What if you don't have to utilize your physical energy to be able to do the things you want to financially? So as you make more, you invest more and pay yourself first, because even though we like to spend, we're giving that money to some other company, to some other individual that is making their money, fine. But what about you? Yeah. Because you're going to decrease your net worth every time you spend. So what if we spend and invest? I always say it's not this or that, it's this and that.
We got a little bit of time left.
Yeah, she's definitely not lying, but they are getting out of the brokerage talk. So we're just going to go ahead and final thoughts on that, y'all. Final thoughts on investing in the stock market, where to start. Just start. That's the best thing that I can tell you. I know how y'all feel right now. If you're actually doing the research, you're kind of excited, you're kind of nervous, because we all hear big things like stock market crash and all these things. However, if you are looking into longevity of the stock market, it's one of the best places that you can put your money. Think about when it crashed. Think about when the stock market crashed in 2008, guys. Where is it now? If you could have made it through 2008, you're up. It's a lot of fear mongering going on all the time, guys. So my advice to you would be just to start, take the leap and go for it. Have that mindset that she was talking about at the end, y'all. You need to invest in yourself first. And yes, we all are getting you're getting into a career, getting to the bag. You got more money than you've ever had. Make sure when you are getting a hold of more money, you're not increasing your lifestyle. And instead, you are investing it into assets that will grow and produce money for you in the long run. At least 10% to yourself first, guys. With that, make sure y'all like, subscribe, and leave a comment. Let me know how you felt about that video. Will you start? Are you planning to start? Automate that thing, y'all. Automate that thing. Your nerves will be way less if you start at a low amount. Like I said, I'm only doing 25. I'm only doing $25. And I'm for sure going to increase to $100 weekly now because I'm just more confident in the stock market. Even if it goes down, I kind of understand that from 1 year, y'all, I understand that the stock market goes up and down. But when it goes down, that gives you a chance to collect more of that stock at a lower price because it's going to go back up if you invest into some of the basics, ETFs, the basic ETFs, or like the Magnificent Seven or something like that. Not taking a lot of risk and going in for the long run. Hey, y'all, with that, like I said, make sure you like, subscribe, and leave a comment. Also,